Welcome back. You're watching Newscentre. The other big story we're tracking, the Reserve Bank of India has announced a surplus transfer of around 87,400 crore rupees to the government for FY23. This is the highest surplus transfer since 99,000 crores in FY21. The higher surplus is due to higher earnings on sale of forex. RBI would have also had higher payouts due to SDF rates. PSU banks also reported higher profits, which would mean higher dividends. The RBI board has also decided to keep the contingency buffer at 6%. The Bimal Jalan committee mandated the RBI to keep the contingency buffer at 5.5% to 6.5%. So far, the RBI had kept its buffer at 5.5%, but now it has decided to increase that to 6%. For more on this, we're joined by Madan Sabnavis, Chief Economist at the Bank of Baroda. Mr. Sabnavis, thank you very much for joining us. Is this dividend payout on expected lines?
No, I would tend to think it's slightly better than our expectations because we were looking at a number of around 65,000 crores. I know in the market there were quite a few dealers who were expecting to be above 1 crore, so 1 lakh crores rather. So which means that the very fact that the bond yields have gone up after the announcement of 87,000 crores, it does mean that probably the market was expecting something more. But I think from the point of view of the government of India, I think the transfer is definitely much higher than what was budgeted for in the union budget. We had a number of 48,000 crores from both banks as well as the RBI. And the RBI has actually made up more than what was required. So there's a 40,000 surplus purely on account of the RBI transfer. And we all know that the public sector banks have announced very buoyant results for the fourth quarter and for the entire year. So the transfers from the banks would also supplement this particular non-tax revenue of the government. So on the whole, I think it's very good news for the government of India.
I would also like to ask you, how will this dividend payout help the government in reaching its fiscal deficit target of 5.9%?
So if you look at it in the current financial year, the government was also banking upon getting substantial funding from the disinvestment route. Now, the way things are going, to my mind, there is a bit of skepticism about whether we'll be able to reach the disinvestment target. There could be certain slippages out there. So I think any kind of slippage which takes place on any of the major items of income, especially the disinvestment, is something which will be made good on account of higher non-tax revenue. And to this, we can also add the fact that the public sector units are supposed to get in 43,000 crores, that is besides the public sector banks. And if you look at the performance of the oil marketing companies, which are largely government-owned, there could be a good bounty coming from that side too. So on the whole, I think any fear of revenue slippage can actually be kept behind us now, given the fact that the public sector, as well as the RBI, are going to transfer more than what was expected in terms of the budgetary number.
Does this give a good enough cushion to the government to continue with growth agenda, to push growth in FY24?
See, definitely they will have more elbow room for this year. Now, I don't think we will reach a situation where the government is going to announce anything new, because whatever had to be done in the so-called pre-election year was already done, and the government has been fairly conservative. Now, the only apprehension one could have had was that in case economic growth turned out to be slower than what the government has expected, because the government was probably talking of growth in the region of around 7%, whereas today we are talking of something more in the region of around 6 to 6.5%. So if at all there is any tax slippage, especially on the GST collections, which are very buoyant last year, and now if we don't have that happening this year, because inflation is also going to come down, nominal consumption will be coming down, in which case your GST collections could be affected, then I think we have a very good cushion which has been provided by the banking sector in particular, and probably also the other PSUs.
Mr. Madan Sabnavis, thank you very much for joining us with your view on the dividend payout by the RBI. With that, we're moving